You hear the words investing and trading all the time, don't you? A lot of people use them like they're the same thing. But what if I told you they are two completely different philosophies for making money? Today, we're going to pull back the curtain and demystify these terms once and for all. It's a super common misconception, and honestly, a fair question to ask. I mean, they both involve buying and selling stocks, right? But as you're about to see, that's pretty much where the similarities end. Let's break down what truly separates an investor from a trader. Okay, let's get right to the heart of it. The end goal for both? Yep, it's the same. Grow your money. But the journey to get there? Whoa, that's where the paths split off in completely different directions. We are talking about two fundamentally different mindsets, strategies, and timelines. So first up, let's talk about the investor. If you're an investor, you're not sprinting. Oh no, you are running a marathon. This whole strategy is built for the long haul. See, an investor isn't just buying a stock ticker. They're buying a piece of a business. The whole idea is to hold on to it for years, maybe even decades, and just let that investment grow. The goal here is slow and steady wealth accumulation, not just from the company getting bigger, but often by collecting those sweet dividend checks too. And this quote from the master himself, Warren Buffett, just hits the nail on the head. He said, "Nobody wants to get rich slowly." And that's exactly the challenge of investing. It demands patience. It demands discipline, the ability to let your money do its thing and compound over a long, long time. So how does an investor even pick which companies to buy? Well, they basically become a detective. They use a method called fundamental analysis, and their mission is to figure out what a company is really worth. This whole process means digging deep, really deep, into a company's DNA. Investors pore over the numbers, revenue, profits, all that stuff, but they also look at the things you can't put on a spreadsheet, like, is the leadership team any good? Are they innovative? They're trying to answer one big question. What makes this a solid business that's worth owning a piece of? Let's make this super simple. Imagine you're looking into a company called Wee Wee Shoes Corp. You see their shoes are absolutely everywhere, their profits are climbing, and they have this awesome plan for the future. An investor would say, okay, I'm buying in, with the full intention of holding that stock for the next 5, maybe 10 years, because they believe in the company's long-term growth. All right, now let's completely flip the coin. If investing is the marathon, then trading is the 100-meter dash. It is all about speed, timing, and cashing in on short-term moves. A trader looks at a stock very differently. It's not a piece of a company, it's a vehicle for quick profit. They are hunting for those little price swings. Seriously, they could be in and out of a position in a matter of hours or even minutes just to ride a quick wave of market volatility. A lot of traders will argue that a company's deep financials are kind of irrelevant because all that info is already baked into the stock's price. So instead of looking at the company's health, they focus on the price itself and, just as importantly, the mood of the market. And to analyze all that price movement, traders use a completely different toolbox. It's called technical analysis. This has nothing to do with a company's balance sheet. It's all about its chart. Technical analysis is really the art of trying to predict where the price will go by studying where it's been. Traders are like chart detectives, looking for specific patterns and signals that might hint at the next move. Their ultimate goal is to answer one critical question: when is the perfect moment to buy or sell? And this brings us right to the huge trade-off with trading. Yeah, the potential for big, fast profits is what draws people in, but that reward is balanced on a razor's edge of risk. The same wild swings that can make you a lot of money in a day can also wipe you out just as fast. Okay, so we've walked down both paths separately. Now let's put them side by side. This is where it's all going to become crystal clear. And here is where it all comes together. See? On one side, you have the investor, playing the long game for years, trying to build wealth slowly by really understanding a business. On the other side, you have the trader, living in the now, hunting for quick profits using charts. It's patience versus lightning-fast reactions. It's long-term vision versus short-term timing. So after seeing all that, the big question is, which path is right for you? And listen, there is no right or wrong answer here. It all comes down to what fits your goals, your personality, and your life. First things first, think about your timeline. I mean, are you saving for something decades away, like retirement? Or are you looking for results maybe this month? That time horizon is a huge piece of the puzzle. Next, you gotta do a gut check. How do you handle pressure? Trading can be a high-stress, high-wire act with very real, very fast losses. Investing, on the other hand, is a much slower burn, but it really tests your patience. You have to be honest with yourself. Are you built for the sprint or for the marathon? And finally, let's be real about time. How much time can you actually commit to this? Successful trading isn't just a hobby. It can be a full-time job where you're glued to a screen. Investing, though, can be as simple as set it and forget it. Now, no matter which path you're even thinking about, there are these classic traps that snare almost every single beginner. So let's talk about how to sidestep them. Here are the big ones to watch out for. Don't just dive in without a plan. Don't blindly follow some hot tip instead of doing your own homework. Please don't put all your eggs in one basket. And the biggest one of all, don't let fear and greed make your decisions for you. Avoiding these is absolutely crucial, whichever path you take. So there you have it. Investing, the marathon. Trading, the sprint. Both are trying to reach the same finish line, but they require totally different skills, mindsets, and preparation. The question isn't which path is better. The real question is, which one are you willing to train for?